We've had 15 years of successive surpluses, so we've gone into this crisis with a much stronger fiscal position than many other countries, which I think has served us well. Most of our entitlement programs, whether it's health care, Social Security, are fully funded. So I think the foundation in Canada has been quite strong.
Our mortgage market is based on sound credit quality. We did not have investors staying away, for instance, from our mortgage market. We did not have this collapse of the availability of credit. We did not have this big rise in interest rates. So that's the first thing that gave that safeguard. And as I said, because we have this mortgage default insurance, lenders did not have this knee-jerk reaction of staying away from the market because they knew they could continue doing mortgage origination under the protection of this program.
At OSFI, we have a small system. I mean, if you need a change, you make 5 phone calls. We have a very open relationship with our institutions. The door is open. We expect them to tell us everything, and it works for us.
It comes across as a much more of a partnership where they really are trying to understand your business here and then how we operate and understand our business and understand where the risks are. So I think they've spent a tremendous amount of time getting to know the Canadian banks and how they operate, and they've done a very good job throughout this whole crisis.
I think the biggest safeguards for the Canadian system have been that there is only one financial institutions regulator. The regulator looks after not just banks, but insurance companies and other financial institutions, and that it's a principles-based system. So you don't comply simply with the letter of the law, but the spirit of the law as well.
Canadian banks have always been known for their prudence, their caution, and their care, particularly when it comes to lending. And this is sometimes seen as a national characteristic, but it certainly is true of the management of Canadian banks.
The Canadian institutions have been able to weather this crisis because I think they started off with perhaps a couple of things. One, a diversified earnings profile, a very strong domestic franchise, very strong capital levels. And I think those things have held them in quite good stand.
During that period of time, our core banking business, particularly domestically, continued to perform very well, where in other parts of the world, like the United States, not only did you have weaknesses in securities-related businesses, but you also saw it on the core banking side. And we didn't have that, which has certainly been a value as well.
You can make a big mistake in good times, and you can make a big mistake in bad times. And you can also make very good acquisitions in good times and in bad times. And so for us, it's really, show us what you plan to do and why you think this is a good idea.
Act quickly or aggressively is a bit like trying to catch a falling knife. You can cut yourself pretty badly on the way down, and you've seen some institutions do that. So we're going to operate continue to operate with a high degree of caution, but partially because we don't think opportunities are going to go away quickly.
When you go buy some banks or properties in the U.S., you don't put your risk management model in the closet and say, now we're gonna do something totally different. So when you go and buy banks, you look at, first of all, their risk management practices, and if they are not compatible with yours, you wouldn't be comfortable buying.
I would say that one of the things that stood us in good shape coming into the turmoil will be that which makes us strong coming out. In other words, I don't see that we're going to change our prudent approach. It made us strong before, and I think it's going to be a characteristic of the banking system going forward.